Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today is a big day because today we've got the PPI inflation data. I believe Jay Powell's going to speak, and then tomorrow, of course, we've got the CPI data. Before we get into the CPI and PPI discussion, I've noticed a very, very big trend that seemingly is occurring right now in Bitcoin. First of all, we've had Switzerland's biggest bank, UBS, announced that it owned the BlackRock Bitcoin ETF as per its SEC filing. We also had Wolverine Asset Management reporting owning over $62 million again through the Bitcoin spot ETFs. We also had the Bank of Montreal announce it holds multiple ETFs. Bracebridge Capital also has reported owning over $433 million worth of Bitcoin. And even JP Morgan has had to announce per the SEC filing that it holds Bitcoin ETFs. So this is a massive trend, and we are now up to around 186 wealth managers having reported owning Bitcoin ETFs this week in this SEC filing. So the institutions, the banks are well and truly here now. And to me, this speaks to higher prices coming in the not too distant future. These guys are going to want to pump this thing up before they can start to exit. And we just so happen to be around 5 days away from a perfect day 60 cycle low for Bitcoin. So we have now officially entered the timing window. 60 days would be perfect, but we can have plus or minus 6 days either side of it. As of today, we are officially looking for swings and reversals. In an ideal world, we will get an undercut of this prior low, okay, and a nice V-shaped recovery. Out of there, I will be looking to get long both Bitcoin, and in the level 3 member section, I'll be also looking to add a bunch of crypto-related equities out of this cycle low. We do have to be on guard, in my humble opinion, because let's assume, just for the sake of argument, that we get a very low PPI print followed by a low CPI print. It would not at all surprise me if we come swinging out of here and have to confirm this as an early cycle low. So the best case scenario is we do get a dive down and a swing. In the worst case scenario, as I said, we've got to be on guard to see something like this coming this week. And if that's the case, then we will have to be getting long. If this is indeed the cycle low, we should see us trade above the prior high at around 65.5. And if we do not trade above 65.5, it tells us to be open to keep our eye out for more swings and perhaps one final dip down coming. Given that the PPI and CPI historically is known for a lot of chop and volatility, I wouldn't at all be surprised if this is what we get. Perhaps even some kind of fake pump, reversal, and then go. But we are finally in that timing window now where it's time to be on guard, looking for price structure changes, looking for a big push to come out of here. Like I said a million times already, the ideal situation is an easily identifiable swing. There's no way you have to come down that low at all. It could easily be something like this, right? Or a slight undercut. But hopefully, okay, the market will give us the setup. Hopefully it'll be nice and easy to identify. And if it is, then we'll be able to capitalize on that. The crypto-related equities look like they're setting up to see one final low, even if Bitcoin doesn't give it to us. So I think overall, we should have some positions in the not too distant future pertaining to Bitcoin and those crypto-related stocks. And so today is finally the day, right? Today is PPI day. This is the Fed's preferred inflation metric. It's actually expected to come in softer than the prior month. So it's going to be interesting. And then again, we're going to be looking out to CPI tomorrow and find out just how much merit there is to this sticky inflation narrative. The NYSE advanced decline line has hit a new all-time high, not seen since 2009. And every single occurrence either confirmed or led a new S&P 500 bull market to new highs. And so the setup is here, underneath the hood for the stock market, to see inflation data lean favorably towards the bulls here. Meanwhile, as I briefly touched on in yesterday's video, the CPI, or rather the CPI basket, continues to be manipulated. As I was saying yesterday, we did see a significant increase in coffee prices from March through to May, and yet instead of reporting this in the data, they're going to remove it from the index. So canned coffee right here has been omitted. So it's going to be really interesting to see how big of a gap there is between the US government reported rate tomorrow and what Trueflation currently has us on, which is a low two handle. Elsewhere, we are starting to see liquidity increase at the hard right edge. Okay, this is the rate of change of M2. You can see starting to move higher. A lot of people are getting excited about this, and in the short term, this could certainly find its way into risk assets and provide the liquidity to get that pump up, to get that blow off top. I'm still currently in the camp of people that maintains whatever you do to the rate of change of M2 shows up with the CPI data with a lag, and therefore, I am still expecting that most of this has not yet shown up in the inflation data. And whilst at the hard right edge, we could expect this to find its way into risk assets very, very soon. Whilst at the hard right edge, we could expect the markets, particularly Bitcoin, which is the king of sniffing out liquidity, to front run the expectation that M2 is going to continue higher. I am, like I said, still in the camp of people that thinks we have yet to see the full effect of this snapback in the rate of change showing up in the CPI data. And whilst I am happy to maintain this as an idea for a few months longer, okay, if we continue to see sticky inflation, if we continue to see an uptick in inflation, then, I can only maintain this as an idea, as an expectation for a few more months before it becomes unreasonable to continue to do so. So it's going to be interesting. For me to maintain this as the idea, I really do need to see PPI and CPI start to come off over the next few prints. And speaking of liquidity, okay, the QE of all QEs, the last dragon, aka the bazooka from China, is here. Chinese liquidity is coming. Again, Bitcoin, the king of sniffing out liquidity, is likely to front run this, as will the stock market. So it's going to be really, really interesting to see if this increase in liquidity can be front run, all against a backdrop of inflation actually coming off, as the Fed will no doubt want to take credit for taming inflation via the higher interest rates. Something else I still can't get away from is this unemployment situation. As far as I can tell, okay, this is not a good look. This is not a good look. And whilst it's very easy to look at liquidity going up and say, well, printer go burr and risk assets to the moon, everything higher well into the end of next year, and maybe that's the case, right? Whilst it's easy to say all of that, I don't know how you reconcile this, okay? How do you reconcile the fact that the unemployment at the hard right edge, okay, is starting to look an awful lot like the prior times we saw this exact same setup? And of course, for those of you that know your market history, each and every one of these times, the stock market and risk assets suffered absolutely terribly. Meanwhile, when we look at the consumer, okay, the consumer is now back to struggling. You can see here, excess savings back below zero, back below the whole C19 era. And all of that, again, against a backdrop of massively increasing credit card balances. I still cannot get away from the fact that the consumer is not in a good way and is likely about to lose its job. So short-term positive, liquidity is probably here, printer is coming, we're probably going to see the third and final angle in the blow-off top set. But again, that's kind of good news and bad news, right? It's good news for the people that can get long in the short to medium term. It is bad news because if we continue to go much higher, if we continue to accelerate, then we will have to come tumbling down, and we'll be able to look back at things like this and say, well, it was kind of obvious in hindsight. And so from us going from 0% Fed rates, 0% car loans, and sub 3% 30-year mortgage rates, we've now gone to 5% plus in Fed rates, 14% for new cars, 7% mortgage rates, credit card APRs are now around 25% plus. And all of this has happened in just 18 months. So what could possibly go wrong? 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 The inflation is not sticky narrative that I am suggesting is what is in play right now is, of course, not a popular idea. Most people think inflation is sticky. Most people think it is guaranteed to go back up in the very short to medium term. And most people think that there's no chance of rate cuts. Okay, most people think that even additional rate hikes are going to be put back on the table. And maybe, of course, they are right. Okay, none of us really know. But as far as I can see, there are hints. Okay, there are hints that these rate cuts are closer than most people want to accept. We saw Sweden's central bank cut interest rates for the first time in 8 years, as have the Swiss, the Czech Republic, and the Hungarian central banks. The European Central Bank is also widely expected to cut in June. Okay, and perhaps even the Bank of England as well. So is this the leading indicator, particularly if we get the lower CPI and PPI prints this week? The really big question for me is, do they start to put rate cuts back on the table? Do they start to reprice in favour of seeing rate cuts as early as June or even September's meeting? And as I was just saying, that there are some subtle hints under the hood, right? Here is another hint. I've shown this a bunch of times, okay? The 2-year bond yield in green typically leads the Fed funds rate lower. It did this in every other time, okay? 2-year yield cutting cycle occurs, 2-year yield lower, cutting cycle occurs, 2-year yield lower, cutting cycle occurs. And I believe this is going to be the biggest signal. If we can see the US 2-year yields continue to move lower, then I think we will see these rate cuts show up much sooner than most people are anticipating. And again, this is going to be a major signal this week, in my humble opinion. Once we've got the CPI and the PPI data, does this 2-year bond yield, complete its breakdown, retest, resumption to the downside as per this yellow squiggle, or do we get sticky inflation, the higher for longer pertaining to interest rate narrative continue, and does the 2-year bond yield manage to recover and continue higher? Of course, if it does recover and continue higher, then we can look back here and say, okay, probably not going to see any rate cuts anytime soon. But what if this is indeed breakdown, retest, resumption to the downside? What if we do close the week or early next week, take out this local low from back here, confirming this is indeed breakdown, retest, resumption lower? Then how do you look at this, which will look like this by this point, and say, well, I know what happens here, more rate hikes, right? I mean, there's a first time for everything, but it would indeed be a first time. So as I said, I believe this is the signal. This is probably going to be the biggest tell for the rate cuts. And even if we did get sticky inflation in the PPI and the CPI, and the bond yield moves lower, it tells us that the bond market doesn't believe the inflation data. It doesn't believe the Fed can maintain higher rates for longer, and it will be suggesting that rate cuts are indeed coming very, very soon. So it's a wild time to be alive. The stock market is due for a little bit of a pullback, in my humble opinion. But again, if we can get this CPI and PPI data to come in softer or colder than expected, then I would indeed expect to see major upside from the stock market and from Bitcoin too. Seems to me that some kind of shakeout would be normal and to be expected. But so far, Nasdaq is holding above its breakout level, so potentially getting ready to pull the trigger on a long here. Just want to see a bit of data. I don't really want to get chopped up by the CPI, as I often say, lots of games are played through CPI. The Dow Jones, again, maybe it's got to have some kind of pullback before it can go, but ultimately, I do think we're going to finish the week nice and green. The Russell 2K really struggling to reach escape velocity, but I do think it's coming in the not too distant future. Oil looks to be setting up a bear flag, getting ready for a breakdown and a failed cycle. This will be driven largely by whatever the CPI print is. So possibly going to line up a short if we can get a breakdown, but I want to give it a little bit more space just to be sure first. Gold and silver still kind of holding up, right? Not much more to say about that. All the while they're above the cycle lows, then no worries at all. Same deal for the dollar, okay? The DXY still above its cycle low. So until it loses this low from back here on the 3rd of May, it's only reasonable to expect further upside. And certainly unless it can break down from this upward slope in blue, then it tells me again to expect higher Dixie walking forward. The longer this thing trends up for, the more and more it seems to me like the writing is on the wall. Why on earth is the dollar running with gold, with Bitcoin, with the stock market? And if you can't understand how this works, I do have a video from about 2 weeks ago called How the Dollar Runs with Bitcoin, Stocks and Gold. So you can go and check that out if you're unfamiliar. Last but not least, okay, here's Bitcoin. Is Bitcoin going to give us that nice setup? Is it going to give us an easily identifiable cycle low and a swing to buy? If it does, happy days, long and strong, or get long here, confirm it with a trend line breakout, and it should be party time, right? It should be party time unless there is no left translated cycle, unless Bitcoin is going to do what it always does and nothing is different this time around. As I said earlier, I am on guard here because if we get some big green breakout, something like this, right, then I obviously want to be taking advantage of that. I don't want to be sat here waiting for a cycle low when I should really be getting long somewhere in this neighborhood. But we do need to clear this prior high back here from 65.5 before we can entertain a change in market structure and a trend shift. All the while we have not taken out that level, then I expect to see a cycle low show up, and I'm still hunting for that cycle low. If I pull up Coinbase just as an example, okay, Coinbase as per Bitcoin, its cycle is down. Coinbase looks to be giving us that lower low, okay, looks to be giving us that cycle low, looks to be giving us that setup, looks to be about to be a long and a buyable swing within the next few days, and then I'll be looking to add the third position in the members section. So there are signs under the hood from these crypto related stocks that perhaps we are going to get that flush down, perhaps we are going to get that nice swing and a reversal to buy. So overall, things don't look so bad, right? I'm always hesitant, I'm always careful and cautious into things like PPI and CPI because of their historically choppy and volatile trading sessions. But as always, by the time we get to Thursday, the dust should have settled, the true direction should have revealed itself, and it should be time to take advantage of some positions, if not before. So I'll be back tomorrow to discuss the PPI data, to look at how it potentially has impacted or not impacted the probabilities of seeing rate cuts. And in the meantime, I hope you have a fantastic week. Until next time, take care from me. All the best. Cheers. Bye.